Welcome to Markets Now. I'm Michelle Rook with Ted Seifred, Zaner Ag Hedge. It was a higher day in the livestock, a lower day in the grains. And Ted, let's start off talking about the grains, broad-based selling. How much of that was weather?
I think for me, it was like weather's been kind of the driving factor here for the last couple of weeks. We had put a bit of a weather premium into the market, bouncing off those lows, really based on concerns about that second season safrinate corn crop. But that's certainly gotten a lot better. And in fact, if you look at their extended forecast now, there's rain in it. And each day we go forward, that forecast moves forward as well. And now it's getting us sort of to the end of their growing season without any major concerns. Now, it's an extended forecast. I've been quoted many times for saying you trust extended forecasts for about as far as you can throw them. So that can absolutely change, Michelle. But if it doesn't, and if they get what's advertised, you really have to be adding bushels to that Brazilian corn crop rather than subtracting at this point. And it doesn't really scream that we're going to have a hot and heavy export season because of a shortfall happening there. So that's a reason to take some weather premium out of the market. And then also when you look at what we've got going on, 10, 15 days ago, we were going to say, well, the drought monitor is looking kind of concerning. We're getting really dry in some areas, but then we got a whole lot of rain. It really did a lot to fix that drought monitor. It's one of the better drought-looking monitors on this date that we've had in a little while, with the exception of Northeast Iowa. Guys, I hope you get your rain soon. But aside from that, there's not a whole lot of areas of major concern right now. And that conversation is actually shifted over to, now it's too wet. We might see planting delays. Yeah, but it's really early for that conversation. And also, if you look at the extended forecast there, again, as far as you can throw it, it looks like we're going to have some pretty nice windows of opportunity with warmer, drier conditions towards the end of the month, where we really could get planting like gangbusters. I mean, we've seen how quickly we can get crops planted nowadays, right, given short windows of good time, a good weather forecast.
So, Ted, are we running out of time to either have a normal spring weather rally or for these funds to have the spark they need to cover their short positions?
Yeah, so there's two catalysts for something like that. And again, the first would have been Brazilian weather. I think we are running out of time for that. It can change at the last minute, but basically by the time we get to the end of this month, that corn crop will be, for the most part, made. So yes, running out of time for that one. Now, we could still get one on a planting delay situation here. As I just said, I don't think you see that in the forecast currently, but if that forecast does a complete 180 and it just looks like it's going to rain like crazy, we got a repeat of 2019, well, then you could. But that's what it's going to take, Michelle. I don't see anything else weather-wise at the moment that's going to trigger the funds into covering more shorts. If anything, we saw last week they were adding shorts to their position. That might become a much bigger feature. I think that's what we were seeing here today. And that is a concern. Now, there's always things that can happen geopolitically or globally or something that we're not seeing. I mean, that's if we've learned anything in the last 5-6 years, Michelle, it's that whatever crazy thing you can think of could possibly happen. So, who knows? But at the moment, I'm not seeing anything to really motivate the funds and the large money managers to go running for the doors on the short positions and give us that short covering springtime round.
We should also point out that we have failed several times to get above and close above some of these really key moving averages, especially in the corn, haven't we?
Yeah, it's amazing how the corn has hugged the 50-day moving average, closing within a penny of it many days for the last month or so. Just poised, waiting for that catalyst, waiting for that spark to get us some short covering, higher prices based on weather or something like that. But none of it really ever happened. We had the one day where we had the acreage report and it came in lower than expected, where we got well over the 50-day moving average. But then we ended up closing basically right on top of it. And we've really not spent much time above it since then. So, when you keep running into a brick wall like that, Michelle, eventually you either have to get through it and really extend beyond it, or you start to fail. And this has got the feeling of a chart that might want to roll over at this point. Again, we need some sort of catalyst. I suppose it could come from the WASDE report on Thursday, although I don't really expect much for that. But without that catalyst, you got a chart that looks like it wants to roll over.
Yeah, we've had the same problem in the soybeans, it looks like, too. And when we talk about a catalyst, it's unlikely that either CONAB or the WASDE report on Thursday is going to provide that catalyst, right?
Once again, we're looking for lower production numbers out of Brazil. There's this big disparity between, private analysts and what the USDA has been saying. Again, I think a lot of that hinges on acreage or hectareage, I guess. But, I don't know which way the USDA goes with this. But if they lower it, you're going to have people saying, oh, finally, they're finally seeing the light. Okay, great. And that could be a little bit bullish, but it wouldn't be unexpected. The unexpected outcome on this report Thursday would be if they raised the Brazilian soybean yield. I don't know what we would do with that. But at this point, they're 75, 80% done with harvest by the time that report comes out. Should be a pretty good handle on what that Brazilian soybean yield is. The question that I don't think anybody really knows is what their actual acreage or area is. So the USDA, I think, is well, they've got a tough job to do here. But it should be really interesting. That's going to be the most interesting thing that we have on this report, likely.
Right, and that higher area is why firms like AgroConsult actually increased their production number for Brazil, 4 million metric tons a week or so ago, right?
Yeah, and they're still below the USDA, but they typically are, right? So,
Okay.
That is the outlier. Is the USDA for the past 4 or 5 years has had to increase that Brazilian soybean crop because of underreported area. I think this year they're just trying to get ahead of themselves by not lowering the number based on weather issues. And I think they know, maybe the yield's not as high as what we were originally thinking. But then maybe they're sitting there thinking, well, we don't want to have to lower this and then come back and raise it later based on higher area. Let's just kind of tread water here for a while and until we get more harvest results. Well, they're getting that now, right? So the Brazilian attaché should have some more solid numbers for them at this point. It's going to be very interesting to see what that says. But like I said, a lower number wouldn't shock the market. A higher number, I think, really would.
I also want to go back to when we talk about not being able to get above resistance areas. Is it also a function, Ted, of the fact that we have a lot of unpriced grain out there and we get farmers selling or hedge pressure when we get up in those areas?
Yeah, Michelle, I really do think so. That's another thing that came out of that quarterly grain stock report. We've got a lot of on-farm storage and a lot of corn and soybeans that have yet to be priced. So, which, by the way, that's been a trend. We're off the high prices that we've been seeing the last couple of years. We really want to see that come back. The longer it goes without that, though, we're developing a bigger and bigger problem in a situation where we have high interest rates. It's not a good combination. Cash movement has to happen. So then you've got farmers that are either really good at charts themselves, market savvy producers, or work with guys like me and many of my counterparts that also have charts and are good at that. And it's funny how we see that sort of selling pick up right around key technical areas. We're all kind of on the same page nowadays, it seems, Michelle. So I think that is a struggle, and I think that is part of the reason why we haven't had that technical catalyst for the funds to really, really cover shorts in a big way, is because that we have our price targets all set up near those technical resistance levels as well.
No doubt. Cattle market to the plus side here. That makes 2 days in a row for live cattle. But I have to ask you, is this actually the market trying to bottom, or will the funds use this strength to sell again?
Yeah, I'm not convinced that it's the bottom yet, Michelle. I'd like to say it is. Honestly, I don't think the overall fundamentals have changed all that dramatically for the cattle market. I think we've gotten undervalued here for the time being, but that doesn't mean that this has to stop, right? The cattle market, livestock markets as a whole, are notorious for overshooting the mark, the fair value mark, by a long shot to the upside and to the downside. And a lot of that is because you've got speculators that go running in the doors and then come running out of the doors. And I'm not sure they're quite done with that yet. The other thing is packers, in a period of uncertainty like we have with the avian flu infecting bovine, infecting humans, and all of that, really not sure exactly how that saga plays out, although we haven't heard much about it this week. But when you have that period of uncertainty like that, the packers want to have better margins, because if they're going to be taking on the risk of continuing to buy cattle and doing business, well, then they want to get paid for that risk. So I think they are very much trying to improve their margins. So I don't know. I don't feel like this is done. That portion of the selling in the market is done. Yeah. I also get the feeling that we've had a technical bounce, right? We got back above a key a key support level that had become resistance in the form of a 100-day moving average. But I don't know if we get follow through here, because we're still in this downward trending channel. This is likely an area where they might start to sell into it again, or sell off some of their long positions again. Um, Longer term, I'm optimistic there's more upside potential.
Okay.
Short term, I'm not convinced yet. Give me another couple days like this, and maybe we'll have something better to talk about.
In the meantime, it looks like some of that money has gone from the cattle market over into the hog market, and we scored more new contract highs here today. Not that we haven't had a little help from strong cash and cutout values, but can that market keep going? We're getting pretty frothy there.
Yeah, right. Trying to get up and over the $100 mark in the April hogs. That's pretty interesting. Um, you know, Look, cash cutouts, all reflections that our domestic demand is really pretty solid, and that's great. We're liking our bacon. I don't feel like we ever didn't like the bacon, but domestic demand's good, and that's fun, and that's part of the reason for this. Our export demand's actually been pretty decent as well, although last week kind of slowed down a little bit compared to what we had been seeing, but still a pretty decent number. And then weights being down, there has been a fundamental reason to do this, and like we said when we were talking about cattle, we have this tendency to overshoot the mark to the upside, to the downside. We surpass fair value in the livestock markets. We did that when we made our lows, basically right after the first of the year. We were so worried about how the California legislation was going to affect overall demand and everything like that. The world was ending. Oh my gosh. But then it didn't. And so now we've come back, and I think we're in the process of overshooting the mark to the upside. The question is how far, and I'm not sure. But you definitely have your speculative crowd that have gotten very interested in what's going on with that hog market. It is a very interesting looking chart. It's an enticing chart for your speculative investor. So I don't really get the feeling like we're done here yet. As long as the cash and cutout values continue to go higher in this sort of situation, I think it looks pretty good.
Lots of interesting markets, though, from a speculative standpoint. Gold hitting new highs. You've got cocoa and a lot of other commodities, coffee, sugar. A lot of interest by specs in a lot of places.
Yeah, you hit it. Cocoa's more valuable than copper, which is insane. I mean, that's crazy. But we like our chocolate too. You know, that really is coming with the talk of inflation coming back in a pretty big way. I almost want to say it's commodity wide, but we really see how that's lacking in the grains.
Mhm.
I think a lot of the managed money and the inflationary hedgers have chosen other markets to express that concern rather than the grain markets. And a lot of it has to do with the charts in the grains. A lot of it has to do with the overall fundamentals in the grains. The fact that we have pretty solid supplies. I don't know how much they really read into the fundamentals, like say you and I do, Michelle. But they don't have charts that are saying, hey, these are things to buy. They look at other things. They like to go with the trend, and they like to go with markets that are trending higher. So gold, cocoa, things like that. Maybe that will creep back into the market at some point, or maybe inflation will cool down before it does. I don't know. But I am going to say that I really don't think the Fed is going to be cutting rates in June. If anything, I think there's a very good case for them to raise rates, which that wouldn't really be a very positive thing for commodities as a whole. That might actually kind of, put a wet blanket on this inflationary rally that you're seeing in other places.
Yeah. Interesting discussion. Thanks as always. Ted Seifred with Zaner Ag Hedge. That is Markets Now.